Hello, and thank you for watching this video. My name is Rory, and this is the first video, basically, that I will be doing on politics. I've been running a blog for a year or so, and but I wanted to try a different format. This one here is a little bit, it's an important issue, and I wanted to do it more of a discussion format and try the visual medium for you all. So here's the thing. Today's issue is on basically addressing the tax reform bill and stuff that's going on there. Trickle down economics is a term that was invented by Art Laffer in the Reagan era. And I was Republican at the time. I voted for Reagan twice. And I didn't believe in the economic theory, but Reagan, I was a Republican. Family was mostly Republican. And I believed in a lot of the other concepts that they were pushing at the time. Trickle-down economics just didn't make any sense to me even then, and but it was a small part of the Republican agenda. Back in those days, what it was you would weigh, you'd have a few good years of a Democrat, which was pro-labor, and they would try and help the general middle class and promote wage growth and civil rights, and that, but they would overregulate things. Then you would switch to Republicans, and the Republicans would deregulate things, and they'd be anti-labor, but some of that regulation that the Democrats were and the left was pushing was hampering the businesses, so what you had to do is strike a balance. Either one side existing too long created a problem, and so what you do is, you just alternate between them. We've gotten outside of that because of the establishment policy of, especially after Citizens United, where all of the politicians are pretty much bought and paid for by corporations and by big money donors. So you have a handful of billionaires who own most of the government. And this is a problem because they're not listening to us. It's more the dollar that counts instead of the voter that counts. This is easily fixed if Americans would just get out and vote in regular numbers. But unfortunately, most of us are just disgusted at the whole thing. We don't believe any of our politicians. And so people stop voting, which lets the minority win. Way to let the majority win is get out there and vote. All right, that was a bit of a side rant. So today's topic really is about this tax reform bill and trickle-down economics. It's an important one, because it's caused us lots of problems before, and if it succeeds, it's going to cause us another recession or depression. Here's what happened. Trickle-down economics is also called supply-side economics, and the Art Laffer theory of economics. Art Laffer was an advisor to Ronald Reagan. So the idea is that if you give the supply side, an economy is based on two things. The supply side, that's the people who make things, okay? The people who sell things, either physical products or services or something like that. The other side is the demand side. That's the consumer, okay? The people who go out and buy things, whether it's going to a restaurant and eating, going to a movie, watch a movie, or paying for, the overpriced food, if you can call it that. It's buying furniture, cars, consumables like gas, cigarettes, any of that stuff, okay? That's demand side. Supply, we make it. Demand, we want to buy it. Without a supply, well, there's nothing to buy, okay? So you must have the supply in order to be able to buy it. If it's not there, you can't buy it, right? But you also have to have the demand. Otherwise, you're just making stuff and they're sitting in your warehouse. Or you have to cut rate and sell them at discounts, losing money. So what happens is corporations have to balance. They have to decide who is going to buy my product, how many people are going to buy my product, at what price point, and that's what I'm going to do. All right. If I estimate the demand correctly, which is what a good CEO and marketing staff is supposed to be doing, if I can estimate that correctly, my company will thrive because we are doing a good job of figuring out what our market is, and we are making enough to cover the market. If we guess wrong, If we make too much, we lose money. If we make too little, well, we don't really technically lose money, although economists will disagree. What happened was, though, we lost potential money. In other words, we could have made more money, but we didn't because we underestimated the amount of people that wanted to buy our product. Supply-side economic theory, or trickle-down economics, is we will give a tax break to the corporations and to the top rich class, and that will create a greater supply, and that will create a better GDP, or gross domestic product. And the idea is that if I make 1,000 cars and the government gives me $1 million, I can now make 2,000 cars. And in theory, that means, well, I need more workers for those jobs to make the more cars. And that means I hired more people. And those people, are overall helping the economy, not just me because I'm making more cars. That's, in essence, what supply side or trickle-down economics is all about. The problem is it doesn't make any sense. I mean, just think about it. And we have historical examples. We tried it under Reagan. We tried it under Bush. And recently, Kansas has pretty much bankrupted their state in doing it. So much so that a Republican Congress pretty much kicked the Republican governor out of office because of it. He sat there and said, no, we're going to keep that. And they had to override his veto to get rid of their experiment in trickle-down economics. And he wound up, getting shuttled off to the Trump administration. They didn't actually kick him out of office. He left because of disgrace and everything, and because he was obviously powerless. So here's the problem. The idea of, if you don't think it through, the idea is like, well, I'll make you let you make 2,000 cars instead of 1,000 cars. That would work if there was the demand. If there was enough demand for an extra 1,000 cars, well then, okay, yeah, then I gave you an extra, and I'm reshuffling it around. But if there is no demand, well then what's going to happen? Why should I spend that money you just gave me making more cars that aren't going to sell? That would be stupid. If I'm a CEO, my responsibility is not to America. Okay, even if I might be a patriot and want to help America, my job as CEO isn't to help America. My job as CEO is to help my company. Okay? And that's not unpatriotic. I don't fault them for it unless, of course, they're cheating or causing problems for the company, for the country. We weren't founded on capitalism. We were founded on freedom and tyranny, and we rose up against tyranny, and that's what we were founded on. But capitalism has been a mainstay of America for a long period of time, pretty much since the beginning. And it is an important and vital aspect of America. I would consider it a very important, patriotic part of our system. But that doesn't mean that you have to, as a CEO, you're un-American because you're going to hurt your own pocketbook, your own company, by doing something even if it would be good for the country. It might make you a little more patriotic and a little more awesome, maybe a little more Christian or altruistic, but you're shirking your responsibility as CEO, which is to make your company more profitable. So we can't fault companies for this. Okay? All right. So here's what happens, though. But we can't fault the politicians who think this through and are doing this, especially if they're doing it just because they got paid for, which means they're not being patriotic. They're just being traitors. Okay? They're allowing themselves to be bought and purchased instead of voting what the voters want. All right. So here's what happens. I made these 2,000 cars. 1,000 sold because that's what my people were able to produce and sell, and they knew that. The extra 1,000 we put down there is sitting in my warehouse. I'm now losing money. I didn't raise the tax base. I just lost money. What happens is, so since I'm a smart CEO, I'm not going to do that. What I'll do, and again, we saw this, especially under Reagan, what I'm going to do is I'm going to take that $1,000 and I'm going to buy back stocks. I'm going to pay off loans. I'm going to do anything I can to add value to my company, and in most cases, that doesn't create jobs. For example, I may buy another company, one of my competitors. You know what? I'm bigger than they are. I can buy out some of their outstanding stock. Boom, now I'm my competitor. So I've just hurt the freedom of market, because I just took one more competitor out of the way. So that's why we had the laws against monopolies, which have been curtailed since the Reagan era, and because it was based on free market concepts. If you have one company in control of everything, that's a monopoly. They can set all the prices. They can do anything they want. So, and so that makes sense from the company's point of view. You know what? I'll buy out my competition. Now I can do whatever I want. Walmart, for example, is they're not a true monopoly. They're close. They've driven out a lot of small businesses because they come in, use cut rate prices, and sell things cheaper, and sometimes at a loss, reportedly. They sell things cheaper than the local businesses can because they have an economy of scale. And they don't pay their workers a minimum wage. They pay, it's like, well, we'll hire part-time workers so we don't have to pay benefits, so we save money there, and we'll do this and we'll do that. And they do things to save themselves money. Smaller businesses can't compete. They're gone. Once that happens, boom. Bookstores and Amazon's another example. We used to have a lot of bookstores. Not so much because of online, which hurt them, okay? But also we had people who would, be able to sell without having to pay local taxes. The business had to pay city taxes to help pay for the roads, their surfers fronts, the police to help protect the businesses and stuff like that. And these out-of-state companies could mail order stuff to you, and it didn't help you. So, we lost competition. Short term was good for a lot of people because, cut down prices for the consumers. It looks good in some theories. But there's a sacrifice. For almost everything, there's always a sacrifice. And you've got to be aware of what those trade-offs are and hopefully make an informed decision. Trickle down economics, the reason it fails is because it creates, in theory, it will create a greater supply, but it doesn't do anything about the demand. And smart CEOs will know, hey, I'm not going to spend that money on supply and make more product if it's not going to do any good anyway. No. You know what I'm going to do? I'm going to take that money, okay, and I'm going to buy back my debt. I'm going to buy out stocks. I'm going to buy out my competition. And now I've added value to my company, but I didn't create any more jobs. In fact, I actually got rid of jobs because when companies buy their competition, they're consolidating. They don't need as many people to do the same job. They have a lot of redundancy built in because there was a whole other company, two companies doing their work. And you go, well, you know what? I only need one manager for these people. Boom, you're fired. Fired. We've seen a lot of that in the late 80s, where a lot of companies were buying each other's out and were just destroying it. Carl Icahn became infamous for this because he would buy up a company and pretty much run it into the ground in a number of ways. But one thing he was doing was getting rid of the competition, shedding people, and then he would turn around and sell the company and make more, profit off the stock one. And then a few years later, usually the company would go bankrupt anyway. This is a problem. And that's what trickle-down economics is all based on. And the problem is, even worse than all of that, which is pretty bad if you'll think about it, okay, is we're adding trillions, okay, to our national debt, which we've got to pay back, okay? And all this interest we're hurting our economy long term on the promise that by giving all this tax incentives, we'll be able to raise more money from taxes because it will mysteriously appear. But if you look, there's logic. It's obviously it won't appear. There's no reason for it to. And historically, we've seen over and over and over again, it doesn't. So this is bad for America because it's going to destroy our economy even more. It's bad for America because it's going to get rid of jobs, raise the national debt, cut down on goods and services, and a lot of people lose their jobs. Nobody will get a raise. I mean, okay, for CEOs, it's like, hey, I got a bonus because I made us more valuable. All right, sure. So trickle-down economics, just the whole concept is just a fallacy. It's wrong. And I'm going to include another video on the demand side of economics, which is a more practical side. It has some downsides too. Don't get me wrong. But it's, it's not the outright failure that trickle down economics has proven to be. One other thing, corporations complain about their CEOs, and their stuff having to spend too much money. All right. Here's the thing. While it is true that the top bracket of corporate tax rate is one of the highest of the developed nations, they don't pay that. I mean, we all know that, okay? Because of all the deductions they have and everything like that a lot of other countries don't allow. They say, we're going to tax this rate, but you don't get all those deductions. Our guys, they play games. And the way they do it is they buy a politician and say, listen, if you can pass a law that if I happen to be in this particular area, I'll get this particular tax rate. Or if I have this many people, I'll get this tax break. Or if I spend money on this, I'll get a tax break. And that's why our tax code is so convoluted that it's in need of real reform. Not what's being proposed here, but, hopefully it will eventually happen. Is because it's so thick and convoluted because of all these loopholes that people keep, sneaking in there trying to get the best thing they can for their own selves. The problem is that so these corporations are not really paying more taxes than they are elsewhere. On average, there are a few instances they can, especially if they don't have good accountants. Smaller businesses are definitely they're having problems because they can't afford to spend that money on accountants who are expert in IRS tax law and stuff like that, and trying to go through everything. So that they run into a problem. But the big corporations, they, a lot, if you look at their records, and these are companies, if they have a stock, they're publicly traded. You can actually look it up online and see how much they make and then how much they pay in taxes. And it's amazing how many big companies we have and corporations that actually pay very little to no taxes. And the reason this segment is titled Corporate Welfare is that's what it is. Corporations use, when you and I go out there and we drive around, we're adding wear and tear on the city streets. We are adding pollution from our gas guzzling cars. We are using electricity to run in our houses. We are using up and consuming resources. Okay? And we pay for those out of our pocket for the most part. But some of those are not paid directly out of our pocket, like the street. I don't pay, unless it's a toll road, I don't pay for that city street out of my, when I get it in the car and go. I instead pay for it in my city taxes, which is usually a sales tax. I also may pay for some of it in my income tax. State, I live in Oklahoma, we have an income tax, and that goes towards community development. Some states don't have any income tax for that reason, and they rely on like a federal grant or something. But we all pay federal tax, okay? And that federal tax is going towards infrastructure and stuff like that. Well, corporations use a lot more than we do. Corporations, use the road with their big heavy trucks, their deliveries. Corporations use a lot more electricity. Corporations use, the government has to deal with them with zoning laws. Corporations are a big consumer as well. So why should they not have to pay tax? And corporations are typically, paying nowhere near what we are paying for sales tax. There's a lot of ways they can get around a tax, get a tax exemptions. They don't even have to pay tax at all on their product. Not to say all companies do that, but a lot of companies can avoid that, and not just the nonprofits. They buy out of state and stuff like that. They can adjust things so that they can cover, there's ways for them to cut their taxes. So they have, because they're using a lion's share of our resources, it's only fair that they pay amount. And income tax is, you make this percentage, you pay this amount. Ideally, frankly, a flat rate probably makes the most sense. Everybody pays it if you're going to have an income tax at all. The staggered concept, that's okay. I don't have any real problems with it as long as it's fair and equitable. But the big corporations, the multi-billionaires, they need to pay. Just like the middle class pays, just like the poor pay, they need to pay too. The other thing is, as far as the trickle down economics, one other thing I'll hit on real quickly is the so-called death tax. The death tax is, you'll hear on the left how it's the top 0.2 of 1% or something like that. I think that's a number Bernie usually quotes. And the other guys, the Republicans, will usually tell you how it's to help family businesses. You have to have more than $11 million before it even gets touched. Okay, and then it staggers up a bracket amount. So you have to have. I mean, think about it. I own a small store. That estate tax doesn't apply. The store isn't worth that much. Okay, so no, that's on big, on the billionaires. Not even the millionaires. It's on the billionaires. Okay. So those people are making, all of this amount because there's ways to reduce it below that 11. So what happens is it's just a small handful, and guess what? Trump and his entire cabinet qualify. Well, almost his entire cabinet. Those people, originally what the so-called estate tax or death tax was for was because we didn't want an aristocracy in America. We don't want kings and dukes and, queens and duchesses and barons and all that stuff. We had the robber barons, but the idea is that when you've made it, you go there. I'm a mixed bag on the estate tax because, on one concept, the tax was I made my money. Why should I get taxed twice? That's something they say is, well, it's like a double jeopardy. Well, not really, because what's happening is, and again, I am a mixed bag on this one, but still, what happened is I made my money and I got taxed on it as income tax or capital gains, which is another cheat that, a lot of people use to avoid paying their fair share. And now I'm giving it to my kids because I died. What are the kids? It's income. So why should they get the money from it going to these other people and not, why is it treated special? I see, well, you know what? We all want to leave something for our children. Okay. So I can see that. But on the other hand, the problem is if you keep doing that, the money is gradually more and more focused on the upper echelon and nobody has a chance to grow to that level because it's all going there. It's not being dispersed. And again, these people are using a lot of resources themselves. So they need to be paying for it too. So the tax bill is trying to, by ridding the estate tax, is going to save. Well, again, I mixed bags on it, but not at the cost of this debt it's going to raise us. It's estimated to cost to add another $1 trillion or so to the debt. And the other part is going to add at least another $1 trillion, probably more than that, because I doubt that when they factored this in, they factored all the job loss. We know it's coming. Companies are going to buy their competitors. They're going to fire people or lay them off. And if you've ever been laid off, that sucks. I've been laid off a couple times. It's not fun. You just walk in one day and it's like, we laid off every third person or whatever. I worked for one company and every year they'd be laying off more people and I'd be going through, good, made the cut this year. Okay, made the cut this year. And then finally. Eventually they closed the whole facility down and now they're gone. Company's still around, but in much smaller numbers. And they closed that whole site I worked at down. That is the real threat to the American economy's loss of jobs because of tax policies like this. There are other things that are going to be an issue that I'd be happy to discuss. If you have any questions, suggestions, requests for other topics, feel free to comment on the video, and I'll pop up, do a little research and pick whatever the answer your topics are, like automation. Automation's a problem that the government, we all know about. I mean, how many people lost jobs to automation and stuff like that, or somebody who has known somebody, even if you don't personally lose job to it or know it. That's a big problem and it's growing. And government's not doing anything about it. Not at all. And they know it's coming. All right. Thank you very much for watching this video. And you have an awesome day and take care of yourself. And please, go out and vote. Whatever your policies are, try to vote intelligently, but at least a vote. Okay? Thank you. And by intelligent, I don't mean agree with me. I mean just do your research and vote. Don't vote for the incumbent just because he's an incumbent. Look at the economy and, compare it to a couple years before. Is it better? No? Then why vote for him again?